Welcome back to the deep dive. Today, we are looking at a really fascinating digital migration challenge. It's something facing these huge legacy global finance brands.
Right. Specifically in the remittance industry, we're talking about giants like Ria Money Transfer.
And the problem they face is, well, it's a big one.
It's a huge stakes evolution. I mean, think about it. You have billions of dollars moving across borders, and so much of it still relies on, actual brick and mortar stores, cash, and trusted human associates. So the challenge is pretty stark. How do you convince these incredibly loyal, routine-driven customers who are used to cash to start using a digital app?
It sounds like it could be just a simple UX problem, but the sources we looked at make it really clear it's much deeper. It's fundamentally a psychological and a trust problem.
It is. These customers have absolute 100% confidence in the person they see behind the counter, in the physical act of handing over cash.
And that trust just doesn't automatically port over to an app interface.
It creates this chasm. And if you try to force the issue, just push everyone to digital, you risk alienating the very foundation of your most loyal customer base.
So you can't see the app as a replacement.
You can't. The sources all agree on this. You have to treat it as an extension of the trusted physical experience.
Okay, so let's unpack that. Our mission for this deep dive is to really understand how AI and machine learning are being used as the sort of bridge for this transition.
Right.
We're going to look at how a company customizes the entire journey by analyzing really three key behavioral signals. When a customer usually sends money, what corridor they send to, and maybe most importantly,
But they prefer to pay. Cash or something else.
exactly. And just to make sure we're all on the same page, when we say remittance, what are we talking about?
We mean money sent home by foreign workers. And a corridor is just the specific route of that transfer. So say from the United States to Vietnam, or maybe the UK to Nigeria.
And that corridor is a key variable for the AI, right?
It dictates everything. Compliance, fees, the whole structure. It's a critical piece of the personalization puzzle.
So that behavioral data is the bedrock of the whole solution. You can't just offer one generic digital path.
No, because people's comfort levels with tech, with cash, with digital banking, they're just all over the place. If you push the use your debit card in the app option to someone who only trusts cash,
You've lost them.
you've lost them forever. You have to start by meeting them exactly where they are.
Which brings us right to our first section, mapping the terrain. The sources we read show how Ria broke down their customer base into 4 distinct personas.
Yeah, and this segmentation is really where the whole strategy begins. You're not just classifying them by demographics, but by their relationship with digital trust.
And their payment preference.
And their payment preference. That's key.
Okay, so first up, we have the retail loyalists.
This is your core customer. They love the routine. They know their favorite agent by name.
And they prioritize security and simplicity over everything else.
Absolutely. They aren't necessarily anti-app, but they're very comfortable with how things are.
Okay, persona number 2.
That's the app-ready sender. These are the folks already comparison shopping online, checking competitor rates.
So they value efficiency, cost savings. They just haven't committed to this brand's app yet.
Exactly. Then you have the third group, the digital skeptic,
This sounds like a tougher crowd.
a much more challenging group. They often don't have bank accounts or debit cards, or they just have this genuine anxiety about linking their financial info to a screen.
The trust barrier is high.
Very high. It's rooted in a fear of fraud or just, not being familiar with how it all works.
And there's a fourth group, the agent network sender.
Right, but they operate through slightly different channels, maybe independent agents, not dedicated stores. For today, let's focus on the first 3 because they really represent that core retail migration challenge.
Makes sense. Okay, let's dig into the strategies for these groups because this is where the AI-driven personalization really starts to shine.
It does.
Let's start with the biggest group that's, right for migration, the retail loyalist. What's the tailored message for them?
For the retail loyalist, the message has to be completely non-threatening. It can't feel like you're changing their fundamental trust mechanism, which is cash.
So you don't push digital payments on them.
No, the whole strategy revolves around what's called a hybrid flow. The instruction is super simple. Set up your transfer in the app and still pay with cash at the counter.
That's incredibly subtle. So you're only asking them to use the app for the paperwork, basically, not the actual money part. Why does that work psychologically?
It neatly separates the cognitive load from the emotional anxiety. The app handles all the complex stuff, inputting the recipient's details, checking the exchange rate, compliance data.
All the things that used to be on paper forms or in a long conversation at the counter.
A stressful back and forth, yeah.
Yeah.
But the customer keeps control and trust because they still only hand over their cash to a person they know. You're decoupling the process.
Digital tool for speed.
And physical cash for security. So the app becomes a prep tool, not a payment tool. At least not at first.
It's a low-risk entry point. Okay, now, how does that compare to the app-ready sender?
Totally different approach. They already trust digital tools. They just need an incentive. You don't offer them a hybrid flow. You offer a direct financial advantage.
You appeal to that comparison shopper mindset they already have.
Right. They'll get a very specific, corridor-tailored push notification. It's highly time-sensitive. Something like, wait alert. Your rate to India is 0.5% better right now, but only if you lock it in and pay through the app.
Ah, so you're giving them a concrete, immediate, money-saving reason to just bypass the store completely.
Exactly. Their motivation is time and money. The loyalist's motivation is safety and familiarity. Two totally different playbooks.
So it's clear that, human intelligence designed these buckets, but doing this kind of personalized outreach for millions of users across hundreds of corridors, that's where it becomes a pure AI problem. Which takes us right into section 2, AI in action. How is this hyper-personalization actually done at scale?
The answer is machine learning and predictive AI. It's not just about filtering people into those 4 buckets. It's about predicting their next action and then intervening at the perfect moment.
So personalization is really rooted in prediction.
That's it.
When you say predictive AI, what's going on under the hood? Are we talking about super complex models, or is it more like simple pattern recognition?
Well, it uses models like time series analysis, sequence modeling, but the principle is pretty straightforward. It's pattern recognition at a massive scale. The AI analyzes historical data, when you send, how much you send, where you send it.
And even external factors, right? Like holidays or pay cycles.
All of it. It learns your rhythm.
Okay, give us a concrete example. What does this actually look like for a customer?
Let's invent a customer. Let's call her Maria. Maria is a classic retail loyalist. She usually visits her agent every second Friday, right around 5:15 p.m., just after work, and she always sends $500 to the Philippines. The machine learning model sees this pattern and identifies it as a high-confidence recurring event.
And this is where it gets really interesting. What does the AI do with that prediction?
It creates a proactive nudge. So maybe an hour before Maria's usual visit time, she gets a push notification on her phone.
Which she already downloaded because of that low-stakes hybrid flow you mentioned.
Exactly. And the message says something like, headed to the store soon. Your $500 transfer to the Philippines is preloaded and ready to go. Skip the line when you arrive.
Hold on. If the AI is anticipating behavior that specific, predicting the when and the what, isn't there a risk of creeping out the customer?
That's a great question.
Especially the digital skeptic who's already wary of tech tracking them. How do they walk that privacy tightrope?
That is a critical challenge, and the key is twofold: relevance and perceived benefit. The notification isn't saying, hey, we know where you are. It's saying, we've anticipated your need and we've removed a known pain point, the wait time. The benefit of skipping the line and having the forms pre-filled, that immediately outweighs any sense of being watched. The intervention has to feel helpful and timely, not intrusive.
And the sources really emphasize that the person in the store, the associate, plays a huge role in validating that digital prompt.
Oh, absolutely. When Maria walks in, the associate sees that preloaded transfer pop up instantly on their screen. The AI syncs everything.
So they just greet her.
Greet her by name, confirm the $500 transfer, accept the cash, and complete the whole thing in seconds. The human associate validates the efficiency of the digital system. It reinforces that foundational trust.
The physical and digital worlds kind of blur together.
They do. And that successful handoff still relies on the hybrid flow, which is just so critical for overcoming the hurdles of that third persona, the digital skeptic.
Right. We mentioned their mistrust of linking digital payments.
And this is where remittance companies are fundamentally different from, say, a PayPal or a Venmo. A lot of their core customers just do not have or refuse to use debit cards for this stuff.
So if you require a digital payment, you just stop the migration dead in its tracks.
Instantly. The hybrid flow is the only on-ramp for them. The app is purely a secure data entry tool. The payment must remain cash.
And the AI helps with that cash part too, right? With geofencing.
It does. To make that cash payment experience seamless, they use geofencing. So let's say a customer initiates the transfer in the app, but they're miles away from a dedicated RIA store. The AI steps in.
So what's a cash-in partner in this context, and how does the geofencing work?
A cash-in partner is just a third-party location. It could be a local grocery store, convenience store, anywhere that's part of the brand's wider payment network.
Got it.
Geofencing uses the customer's location data to provide hyper-local help. The app knows you've set up the transaction, it knows you need to pay cash, and it sees you're standing near an alternative location.
And it pings them.
Precisely. You might get a notification that says, your transfer setup is complete. To finalize with cash, your nearest partner is Mike's Bodega, zero point 0.3 miles away, and it's open now.
That removes all the friction of having to search. It basically turns the app into a real-time concierge.
It's guiding you through your physical world. It eliminates the biggest friction point for the skeptic, the fear of not knowing the process or not finding the right place.
So it solves the cognitive challenge of the app, the financial anxiety of digital money, and then the logistical anxiety of finding a payment point.
It's a triple win for adoption. Yeah.
Okay, let's move into our third section, the future experience. We've laid out the strategy and the tech. What does success actually look like here? What are the measurable results?
Success is measured across a few things: efficiency, loyalty, and of course, digital adoption.
So more app registrations.
That's the easy one to track, yeah. But the crucial metric is the rise in customers completing their first digital transfer, meaning they actually bypass the cash counter entirely and paid in the app.
That signals true trust transfer.
That's the signal. But the strategy is also about improving the service for people who don't fully migrate, right?
Right.
Absolutely. The operational metrics are just as important. Store wait times drop significantly because all those loyalists and skeptics using the hybrid flow are no longer spending 10 minutes on forms.
They're just in and out.
In, pay cash, and out in under 60 seconds. It just makes the in-store experience better for everyone. And ultimately, that builds stronger loyalty. The customer feels understood.
So if we pull this all together, the goal isn't really mass migration to one channel. It's creating a flawless omni-channel experience.
That's the perfect term for it. It's about cohesion. Omnichannel here means the customer experience feels totally consistent and personalized to their segment, no matter where they are.
On their phone or at the counter.
The loyalist, using the hybrid cash method, should feel just as valued as the app-ready sender doing a fully digital transaction.
So the magic here is that the retail loyalist doesn't feel like they're switching from a safe method to a risky one. They just feel like the brand is meeting them exactly where they are, respecting their need for cash, but just making the whole thing a lot faster.
That is the perfect summary, and it leads to this final sort of philosophical takeaway from the source material. AI does not replace human trust. It amplifies it.
How so?
The prediction engine, the personalization algorithms, they're just giving the human associate the information they need to do their job faster, more accurately, and with more relevance. It reinforces the trust the customer already has in that person. It just optimizes the human element.
That's a really powerful and practical way to think about leveraging AI. We started with this huge challenge, migrating customers who love cash and fear digital, and we've seen how personalized prediction is the key.
It's all based on those specific behaviors: when you send, where you send, and how you pay.
And using that to create hybrid flows that just ease the transition. It seems AI's main role here isn't just cutting costs, it's about facilitating trust.
Meeting these incredibly specific, diverse customer needs.
Which I think raises a really profound question for you, the listener, to think about after this deep dive.
Right. If AI can so effectively bridge this gap between cash and apps in a high-trust scenario, like remittances, by using these hybrid flows based on behavioral prediction, where else could this work?
Where else might this approach be necessary?
Exactly. I mean, think about those four personas we discussed: the loyalist, the app-ready sender, the skeptic. Take a look at your own industry. Where are your most valuable routine-driven customers kind of stuck between digital convenience and traditional comfort? And could a tailored hybrid flow be the unexpected key to their adoption?
That is some food for thought. Thank you for joining us on this deep dive into how behavioral AI is transforming customer journeys, one personalized, friction-free transaction at a time.